Stephen Carroll is joining me here on Set for Business. Let's find out exactly what's happening in the business world. It's been pretty rough a couple of days on the markets, hasn't it, Stephen? Things any calmer at all today?
A little bit today. It seems like investors are finally perhaps calming down a bit after the days of turmoil that we've seen in recent days. We're also heading into a 4-day weekend for many markets, so perhaps some people also winding down in advance of those market closures which start tomorrow. But if we look at how things have opened up today in Europe at the start of trading, the main markets all opening in the green at the start of the day. Despite the volatility of recent days, we've still got London, Paris and Frankfurt markets trading higher for the week. Just small gains across the markets today, but certainly a calmer picture there. When we look at the whole month, though, on the European markets, these are all still trading down compared to the start of March. Over on the Asian markets, we had some fall on Asian shares earlier on in trading, but markets have turned into the green as the day has gone on. It seems the technology-driven sell-off there on shares has abated. We've got the Shanghai Composite there trading up over 1%, as you can see. Well, despite all of that, shares in digital companies had another bad day on Wednesday on Wall Street. Continuing fears over regulation in the wake of the Facebook scandal hitting shares for yet another day. Facebook had a little respite, though, on their shares, trading up just 0.5%. Of course, they've seen huge plunges in recent days as well. Apple down 1%, Amazon down 4%. That was after reports that Donald Trump was going to go after the online retail giant. Netflix, meanwhile, down by almost 5% in trading. Well, earlier on, we spoke to Jane Fu from CMC Markets in Singapore about whether the volatility in the tech sector was set to continue.
I think the Facebook scandal is only open a door for another chain of dispute or discussion over how to regulate tech stocks. Given that all these big tech stocks is almost considered to be a monopoly in their each individual industry, so this will open a chain of discussion. And the Facebook issue, and together with Amazon, like we see that the U.S. President Donald Trump is trying to change the tax treatment for this company. As far as I believe that the fundamental aspect of all this tech company is doing well, but all this news and investigation will impact the investors' sentiment on all these tech stocks and indirectly impact the whole market, as well as tech stock has already become a flag of the overall market performance.
That's Jane Fu from CMC in Singapore there. Here in France, the government's unveiling a plan to boost the artificial intelligence industry. It includes a drive to attract top researchers, but also developing an ethical policy to regulate the industry. Tech giants, including Samsung, Google and Fujitsu, have announced plans for new AI centres in France. Julia Kim has the story.
Training for the jobs of the future. These 24 students are the first intake of Microsoft's AI school in Paris, France's first academy dedicated to artificial intelligence. At the end of the free 7-month course, students undertake 1 year of work experience, acquiring the practical skills necessary in the fast-growing AI industry, a sector that's expected to create and eliminate millions of jobs.
I can't tell you how many jobs will be gained as opposed to lost. All I can say is we're hiring and we're having trouble finding skilled candidates.
The French government is unveiling a multi-pronged strategy to boost the country's AI industry, with 4 sectors set to benefit: health, environment, transport and defence. This comes as electronics giant Samsung and Japan's Fujitsu also join Microsoft in opening AI facilities in France. But some believe it's not enough to catch up to industry leaders.
In terms of artificial intelligence, France has a few strengths, but immense weaknesses compared to the US and China. They are miles ahead of us.
By 2030, it's predicted most of the world will be employed in new industries, ones that don't yet exist, with some 21 million jobs expected to be created in the next decade.
Facebook, meanwhile, has announced it's cutting ties with a number of data brokers as it tries to recover from the harvesting scandal. These firms, including Axiom and Experian, use Facebook data to help advertisers target people on the social network. Facebook says that while it's a common industry practice, they'll be winding it down over the next 6 months. The news coming after the company also said it would be changing its users' privacy settings to allow people more control over their personal information. And finally, from me, the boss of the Australian airline Qantas has some new ideas for what to do with the cargo hold of planes. Alan Joyce told a Chamber of Commerce meeting in London of his idea to use the space to create sleeping pods or even a gym for passengers. The suggestion is part of the airline's Project Sunrise. That's a plan to create a non-stop flight from Sydney or Melbourne to the UK within the next 4 years. Qantas made history this week with its first non-stop flight from Perth to London. But a 20-hour flight to Sydney would potentially call for a redesign of planes. One consumer advocate is suggesting that perhaps Qantas might be better off giving everyone a little bit more room rather than leaving space for a gym for everyone else.
I've got images of people lined up on the treadmills and then you hit the turbulence.
Exactly.
It's like everyone's all over the place.
Worrying.
No good. Thanks a lot, Stephen. Steve with Business Off for us.